Have you ever heard of a Swiss bank? If so, you might have heard how rich those are, right? But what makes it so rich? Have you ever wondered? Or why do all these millionaires and billionaires keep their money with the Swiss bank? Is it to save taxes? Or to keep any black money safe? Let's find out. Banque Pictet Cie SA stands apart in the folk tales of private banking. For over 2 centuries, the Swiss bank has privately guarded the assets of the rich, led by a small crop of associates who formed the most elite men-only club outside the Vatican. In its complete history, only 43 individuals and all white men have leaped to the rank of Pictet managing partner, producing a bond more enduring than a typical marriage. From their Geneva perch, they supervise more than $662 billion in assets under the management and a level of appositeness far beyond larger, publicly listed compeers, often gratifying each other with more than $20 million a single year. After World War I, the European currencies broadly collapsed, and inexpert, often collective, naturally nervous governments drew back into new industrialism, trying to keep their gold at home or preserve an essential core to the currencies they printed. The flight of capital in all its kinds to Switzerland was not only foreseeable but alluring. In 1965, when there was still nervy money and uneasy government in numerous places, the conventional Swiss banks were the only ones operating accurately, as most banks did in the Golden Age preceding 1914. More than its famed bank secrecy, Switzerland's complete financial freedom results in the unbatting flow of capital. In 1934, bank secrecy was first added to the Swiss law to help derail Nazi efforts to sniff out the exiled German money, applied to the government as well as to credit managers. But in a nation where tax evasion is a directorial affair and not a misdeed, the Bill of Rights states that no governmental agency, foreign or domestic, may impound private property without full and precedent indemnity for any reason. The government does not need to overrun bank vaults. The government, including the Swiss, can never get into a bank safe without a court order, and such a court order is next to impossible to procure. Unlike other banks worldwide, Swiss banks act as a security underwriters and stockbrokers. J-Bar and Company determines that Swiss banks manage or control $40 billion marketable securities on private accounts, and an equal amount in gold and currencies is likely to be held in Swiss vaults. The 3 biggest banks, the Swiss Credit Bank, the Swiss Bank Corporation, and the Union Bank of Switzerland, handle the major share of these assets. According to their disclosed reports, these banks rank only about 50th in size on the world ladder of big banks. But the size kept in private accounts does not sum up on the balance sheets. In this way, Swiss banking acts like an iceberg. A major portion is underground and never revealed. But these private account holdings give the Swiss banks their real significance in the financial world. Swiss banks have a reputation for obscurity and security. For the most part, those attributes still exist. One of the key reasons why millionaires from around the world are attracted to Swiss banks due to its privacy services. But outlanders who use the Swiss private banking system should know that there have been changes in later years. Swiss banks are uncertain about working with foreign clients, and the days of esoteric accounts are over. Still, US customers might aid from using Swiss bank services. Switzerland is a global high flyer in wealth management. The country offers economic and political steadiness that does not depend on the aptness to assist as a tax haven. It is feasible to shape the accounts to depress others from going after your wealth. Swiss banks have a prehistory of keeping their account information private. In 1932, after pulling in 2 employees of a leading Swiss bank, the Switzerland government established the Swiss Federal Banking Act of 1934. As an outcome of the established law, bankers who emancipate information about private accounts or admit the existence of private patron accounts will face criminal charges. Over the period, the seclusion of Swiss banks was utilized to conceal Nazi wealth, protect the holdings of the oppressed, and help numerous others to keep a low profile. The strapping privacy comes from enumerated accounts, which are recognized internally by a number rather than using the depositor's name. However, numbered accounts are not unknown. You will have to provide associating information to open a vault, and only a few select staff members can access the real names behind enumerated accounts. This numbering system helps to limit the number of people who know about your vault and can detect it. The security and solidity of Swiss banks, cited in a shooting and culturally neutral country pledged to privacy, became a tempting charisma for prosperous individuals, and others who did not want to retort questions about their assets' sources as possessions became easier ambulatory across international borderlines. The long shafts leading to the buried vaults and the bank employees with an adamant honor for customer confidentiality became widely popular as these qualities and services were praised in some film depictions. The privacy service provided by Swiss bank accounts has many comforts and drawbacks. Even if you are an honorable national, you may cherish auxiliary layers of privacy. Moneyed citizens may wish to beat down the radar to avoid getting hit with litigation or other undesirable attention. These Swiss accounts are popular for their potential to provide these shelter classes. Swiss bank vaults also possess notoriety for being used by wealthy individuals to evade tax or conduct other illegal activities. Altercations have rampaged over which shielding should be lowered, and some alterations in the system have been made over these years. However, these accounts still confer more possibilities for these types of activities than anywhere around the globe. Like the two-sided coin, privacy also has its limits. Swiss banks now conspire with tax fraud and criminal interrogations, handing over the information that the vault holders might wish to hide from others. Factually, Swiss bank accounts were used for safeguarding holdings from law enforcement, tax authorities, and creditors. We have seen how the blackguards in films use the Swiss vaults to accept payments electronically and stay out of the radar. But asset shielding will not exist if you're found guilty of any activity that Swiss law recognizes as illegal. These banks face condemnation and compulsion to ally with international governments interested in tax yielding, reducing fraud, and brawling terrorism. As a result, banks bear the information regarding their clients in several situations, including criminal assertions, divorce proceedings, and tax investigations. Even though it may be possible to conceal possessions overseas, it is credibly illegal and progressively hard to get away with it. As a result of the Foreign Account Tax Compliance Act, tax evasion is especially hard to pull off. The Foreign Account Tax Compliance Act is a regulation established by the United States, but Swiss banks have consented to declare the information about the account holders from the United States. No doubt convicted by inelastic authorization for non-compliance. It is not illegal to hold assets overseas, but being a US taxpayer, you're required to declare those accounts, which may lead to tax liabilities. If you're not willing to disclose the existence of these accounts, your bank may do it for you. Most US nationals do not get remarkable creditor protection from possessing a Swiss bank account. Swiss banks confederate with civil and criminal discernment, making them much or less useless for circumventing legal punishments, laundering money, or concealing stolen funds where judgments are made by the US courts. Adding extra layers of protection and protecting the assets from creditors is still viable without concealing your possessions or breaking the law. An estate planning solicitor and financial manager Victor J. Medina, CFP, focusing on asset shielding, states that individuals can add shelter by holding assets in establishments such as trusts and LLCs in jurisdictions outside the United States. This would require acquiring perception in those specific regions, but it is not an insurmountable plan. As stated by Medina, you'll have to avoid running in ringly of the deceptive haulage rules, and at some point, the estimate of the claim is worth the cost of the lawsuit to get judgments imposed in those isolated jurisdictions. In other words, motivated suitors with money to burn can easily conquer hurdles. Citizens of nations liable to baseless takeovers or unjust systems are more credible to benefit from creditor protection in the Swiss accounts. A Swiss bank account can be easily opened by almost any adult anywhere around the globe. Opening an account is simple. Minimum balance sheet requirement, which would vary by account type and bank. Foreign account holders own nearly half of Switzerland's $8.59 trillion in assets under management. The banking industry in Switzerland accounts for a tenth of the nation's GDP and employs a comparable number of people. Switzerland has over 240 banks in which all these millionaires deposit their holdings to stay under the radar. What do you guys think? Will having a Swiss bank account help you avoid taxes, or will it help you to be wealthier? Comment down your answers and views. Until then, adios.